If you're filing taxes in 2025, everything just changed. A massive new tax law was just signed that could save you thousands of dollars, but only if you know about these new deductions. Today I'm breaking down the biggest tax changes in years that could put serious money back in your pocket. On July 4, 2025, President Trump signed the One Big Beautiful Bill Act into law, and it's packed with new tax breaks for working Americans. We're talking about deductions for tips, overtime pay, car loans, and even just being over 65. Some of these are temporary, some are permanent, so let's dive into what you need to know for your 2025 taxes. The big picture. This isn't just a small tweak to the tax code. This law makes the 2017 tax cuts permanent and adds a bunch of brand new deductions. The standard deduction is now $31,500 for married couples, $15,750 for single filers, and the child tax credit goes up to $2,200 per child. Game-changing new deductions 2025 to 2028. No tax on tips. Here's a big one: if you work in a job that traditionally receives tips, you can now deduct up to $25,000 in tip income annually. This applies to waiters, bartenders, hairstylists, taxi drivers, and other service workers. The IRS has to publish an official list by October 2025, but if you're getting tips reported on your W-2 or 1099, this could save you big money. Just remember, this phases out if you make over $150,000 single or $300,000 married. No tax on overtime. Love working overtime? Now you can deduct the premium part of your overtime pay, that's the extra half in time and a half. You can deduct up to $12,500 if you're single, or $25,000 if you're married. Same income limits as the tip deduction apply. Auto loan interest deduction. This one's interesting. You can now deduct up to $10,000 in interest on car loans, but only for vehicles assembled in the United States. Used cars don't qualify, and it phases out if you make over $100,000 single or $200,000 married. Think of it as a Buy American tax incentive. Senior deduction. If you're 65 or older, you get an extra $6,000 deduction on top of everything else. That's $12,000 for a married couple where both spouses qualify. This phases out at $75,000 for singles and $150,000 for married couples. Permanent changes that stick around. Child tax credit boost. The child tax credit is now permanently $2,200 per child, up from $2,000, and it adjusts for inflation going forward. Plus, the income limits for qualifying are higher and more generous. SALT deduction temporary relief. Here's some relief for high tax states. The state and local tax deduction cap increases from $10,000 to $40,000, but only through 2029. After that, it drops back to $10,000. There are income limits though. This enhanced deduction phases out for high earners. Charitable giving changes. Even if you take the standard deduction, you can now deduct up to $1,000 in charitable contributions, $2,000 if you're married. But if you itemize, there's a small reduction in your charitable deduction based on how much you give. Business and investment changes. For business owners, this law makes the 20% pass-through deduction permanent, allows immediate expensing of equipment purchases, and makes research and development costs fully deductible again. There are also changes to international business taxes, and some green energy credits are being phased out. What you need to do. Most of these changes happen automatically when you file your 2025 tax return, but you'll want to keep extra careful records if you're claiming the new deductions for tips, overtime, or car loan interest. The IRS is still working out the details on some of these, so expect more guidance throughout 2025. This is honestly the biggest change to the tax code in years, and it affects almost everyone differently. Whether you're a service worker who gets tips, someone who works overtime, or just a senior citizen, there might be new money-saving opportunities here.